It's when okay, this thing's gonna start soon. I never know because it tells me by the time it tells me okay, it's recording now. All right, guys. I have Andy from Finding Value Finance, Finding
Yeah,
Finance
right.
Value.
Finding
I got
Value
it.
Finance. Yep.
All right.
That's my YouTube
And
channel.
every time I look at a gold chart, Andy, I always think of you, man, because you were there way before
You're
like
talking,
everybody up.
you said gold. You mean oil?
Oil. Sorry.
Yeah.
Yeah. Whenever I say oil chart, and especially I did that like oil measured in gold, and it's breaking out measured in gold. So you got to expect oil to outperform gold still. Like I don't know why you have to be weighted. Even goes up, you still have to be more heavily weighted oil right now. It's crazy, and people think it's like we're topping out. I don't think so.
No, no, no. So I did a huge analysis back in 2020. Well, actually, it was 2019, I think. I did a huge analysis on all this, and I looked at the ratios. And when looking at all the ratios, what I found were uranium and oil were the largest leveraged areas of anything in the commodity complex. So I really wanted to gain exposure in those areas. In 2020, I was just lucky to have that event happen, and the event happened in, I would say, in the middle of an expansionary phase of real estate, which is liquidity. You know, the liquidity is coming into the system. We stopped, man-made stopped the economy for a while, and then we restarted it. And I was like, this demand's going to come back. It's going to be a huge problem. The companies pulled back on investment. All of the ESG measures are not allowing. They're not investing in oil and natural gas. So I just thought this is going to be a huge problem in the future. So
Okay.
I overweighted it. That's what I did.
Tell me, okay, this is the oil measured by gold. I had to put on the daily at do you remember like which day you okay, you know what? I'll just put oil
I do.
because this is a lesson in psychology because everybody's petrified and Jesus, when everybody's petrified, you think it's the end of the world. That's when the greatest opportunities are, because
Yeah.
look at
So
that.
if you
Yeah.
pull up some of the companies, I can tell you the companies' names and I can tell you exactly where I
Okay,
purchased. But
let's do
September, late September, early October, and late October. So it was basically the month of October of
but
2020 is where I really loaded in, and I cost averaged into that area. I can even tell you the specific companies I
yeah,
purchased.
let's check them out. Okay, but you didn't catch this falling knife here in April 2020. Were you bullish oil at the stage or
So I was bullish oil, but I put all okay. So I got lucky, and I sold out of the markets, which is a very rare thing that I do, because copper to gold ratio and the 10-year yield dropped like a rock. It was starting to drop like a rock in February, and I just got out completely. It hit the bottom, and I basically put all my money long gold and silver mining companies. The reason I did that is back in 2008 and 9, they do a reflation trade. And every time, back in 09 to 2011, we had a massive move in gold and silver. So I thought, just, based off of that we were going to see a big move in the gold and silver mining companies. So I positioned super heavy in that. And then I rode it all the way up in August. That was the top of gold. I didn't know that at the time, but I saw the opportunities in oil and uranium
got it?
in October of 2020, just ridiculous. So I was like, I have to rotate a bunch of money over. So I became an ultra bull on oil and uranium in October of 2020.
All right, do a name drop on one of the oil companies that you remember that
So my biggest position is SM Energy.
SM.
SM.
That's right.
That is
Okay.
my biggest position that I loaded up in September 28th all the way through October 28th for my buy points.
2020.
Yeah, it's
Jesus.
ridiculous. You're gonna be very surprised.
Where the hell are we? Okay, here, October, the bottom. This, you caught this.
Yes, I did. Yes, and draw a trend line going down. You'll see a trend line. You'll also see a higher low that was developing, and that
Yeah.
is a first fractal of a Elliott wave. I didn't know the fractal thing. I just would see it all the time. I didn't know what it was called at that exact time because I wasn't really a huge Elliott wave. Now zoom in further, and you'll see another pattern on the shorter term. Just the downtrend line, a simple downtrend line. Yep, from that peak lower.
Yeah,
Yep, I was looking at that, and then I was looking at the lows, and the lows looked like they were stopping. Yep, nice little falling wedge there.
yeah, it's beautiful.
And I got super bullish at $1.50 when it was going sideways. I think that was October 25th, 6th, 7th, and 8th is when I bought a whole bunch. I went ballistic. Like Goose says, we're going ballistic, Mav. That's exactly what I did.
Who said that?
Goose in Top Gun. He goes, we're going ballistic, Mav or Maverick. Like, we're going to go ballistic. I was like, oh, man, this is it. And not only was SM Energy doing this, CDEV is another company that I purchased. It had the same setup. All of these companies across the entire sector had the same setup. And I was looking at it with a ratio of 50 to 1, 50 barrels of oil to 1 ounce of gold and greater was that opportunity. I was like, this is the best opportunity I've ever seen in my life.
Here.
But CDEV was another one that I was highly bullish on, and I went long in that general vicinity time frame. That one, I think I got real heavy in it in November. I was making money. I was trying to pile in as much as I could in all these companies. So some I went heavy in October. I sold more off. I went into in November. I even started buying other ones. I bought QEP, which you can't get a chart on it because they were bought out, unfortunately. But the symmetrical moves. Yep.
They're all over the place.
Yeah, it's ridiculous.
This is as fast as it goes down, as fast as it goes up, man. Every single time.
So the way that I chose these companies, if you look at that bounce in March, April, May, June, that time frame, that is a fractal move. So that first fractal move coming up, how much it bounced was how I basically determined the position sizing, because I overweighted SM Energy because the fractal was bigger. CDEV had a fractal. It went from like 20 cents to $2, which was like almost a 10x. So I thought that was very, very good. And then there was a fractal in SM, went from $1 to whatever, $1 to whatever it is. And they were both very big fractals. So I overweighted these like CDEV and SM, and someone else brought up Athabasca Oil. I went heavy into that one too. ATHOF or ATH. Yeah, ATHOF. If you want that OTC one, it's either one. I got in at that one at 16 cents. It was right at that bottom there in like October, November time-ish.
All the patterns are practically the same. That comes back to capital flows. When capital flows start going to a sector, we all look like geniuses. Like, I know, like, man, it's insane. But this is the place to enter, because that's what I wrap my head around is when people start talking about, let's say, Bitcoin, all that. Well, because they're talking about the joy that a stock gave them, just like you're talking about the joy that this stock gave you when buying here, and then you're doing what, like 50, like a 15 bagger all the way to today.
Yeah, I'm still holding on.
This was the time to enter, but I'm pretty sure if I zoom out, I'll try to zoom out on this one, see the big picture. If they're still,
looks fantastic.
They all look like, well, there's a couple of warning signs, but because look how far it's stretched from its 3-year moving average. It's never done that. So it's getting pretty stretched, but until this trend line is broken, that means the momentum is continuing to accelerate on a logarithmic scale, right? So for me, if I had this stock, I would just hold on until I get a close. Until I get a close below this trend line here, there's no reason to sell this thing at all. And there's a reverse symmetry move. It should go to 580 now without blinking an eye, because see it dropped fast here. So it's trying to reproduce. There's nobody. Look, it just broke out a couple of months ago, actually.
Yeah, we were. So yeah, I've got my website too. We were talking about this one on the website and how it's going to break to 580.
Well, yeah, look, it broke. Yeah, so it's on its way. Look, it's a question of time. It's Yeah, just hold on to it, and in a few months it'll be there. And that's probably
Yep.
when oil is going to start reaching that 150 there, 145, 150. I think it's going to reach that in 5, 6 months max, maybe even faster.
Yeah, we'll see. It's going to be a big move.
But what's the oil chart looking at? But you know, it's like even platinum, man. I was looking at the platinum chart. This is super bullish pattern there.
Yes.
This is
Yes,
like,
I'm ultra bull on platinum.
look at that. That's a bullish expanding descending wedge. I love these.
Yep.
These it's going to resolve upwards, man. I don't see how this thing doesn't resolve upwards.
Yeah, and it's got a long-term downtrend break. It's doing a back
Right here.
test. It looks so good.
Yeah, look at that thing.
Yeah, we got to break that one too. Yep.
Yeah. But if you want to start positioning early on the cheap, it's now here when nobody wants it. Like, it's trapped. So here you accumulate. Look, it's higher low. It's still doing a higher low. So
Yeah,
you
so
gotta,
just to let you know what I'm doing, I'm buying platinum. I mean, I bought it in 2020 at the bottom. I even exchanged other metals for platinum, and then I bought it all the way in that bottom area, all the way to like about $1,000. I bought a whole bunch, and then I'm buying more even now. And I'm buying physical platinum.
look at that.
Platinum is more sensitive to inflation. So if we get the inflation like it is, I think we're going to see a move higher in platinum.
And me there, every time I look at the best, craziest moves, there's huge bases, and nobody believes in these bases. And then when you break out years later, let's say I zoom, and then you see, look, I'll just remove the price action from here. This should explode. You see that huge base of volume for this here?
Yes.
It's the same thing happening over and over again. Huge base. Nobody believes it. And man, that's a pretty severe pullback. That must have crushed everybody.
Well, I mean, for me, I don't get crushed. I just keep buying. Like
Yeah.
the ratio. I'm more guided by the ratios than I am guided by the technical analysis per se. I'm just using the technical analysis to say, yeah, it's still good. And then I draw the big trend lines in, and if we're still above the trend line, I'm good to go. Like, I will buy the living poop out of it.
Let me see that's a ratio I don't look often. Platinum measured in gold. Wow.
Take it off of logarithmic, because I don't
It
know.
hasn't moved logged. Yeah.
Yeah, I don't know if.
There's a huge falling wedge right here. It's starting to
Yes.
wake up, actually, Andy. It's
Yep,
starting to
that's
wake
what
up.
I'm saying. Why do you think
But
I'm rolling in it like it's nothing?
well, you know what that chart? I'll tell you what that chart. I did a podcast recently, and I've like uncovered like the Rosetta Stone of all this stuff there, all these uranium charts, platinum. It's either U.S. equities or it's commodities, and this is the chart. It's the gold chart divided by SPX.
Yep.
And look at that. It's practically your chart. See? Look at that. It's the same thing. So what's going to happen is when gold outperforms the SPX, then the capital flows. Look at that. It's the same. It's, of course, the spikes are not always at the same place, but it's the same type of.
Well, the thing that's good about this is sometimes platinum does inverse of that. So I'm hoping that platinum can run because if you do a platinum to silver ratio, you should check out that one. Check out that one. You might like that one quite a bit.
Silver.
Yeah, you'll like that one quite a bit.
Look at that.
And then draw the trend line in and see where that's looking like on the just the long-term downtrend line. And you can see that the fractals are or that we're contracting down into a point. The ups are less and the downs are less, and that's usually when you consolidate to a point and then break. But we are right there in that falling wedge, and then check. I think we're breaking out. We might be breaking out right now on that that ratio.
I call that the wake up line, and after that we probably get a less steep. That's going to probably be the early breakout line, and the crowd. Look, a lot of people are waiting for this breakout to happen here.
Yes,
a lot.
Correct. Yep.
So this is how you get, if you like, don't go crazy, guys, because there's opportunity cost in case this goes sideways. But anybody buying here, just the move to the breakout line. That's the ratio. This ratio has to move 35% up. And then after that, you get the move to probably all the way up here. And that there's another, Jesus, Patrick.
And that's against silver. And silver's a beast.
And silver is going to be, well, look, it's the ratio chart. So this ratio chart of gold to SPX is, I'll remove versus silver. Everything's going to go, look, remove all my drawings. Platinum, look how it just tracks. It just tracks a ratio chart. It's crazy.
Yep.
Man, it's going to be wild. So if platinum breaks out, everything's breaking out. That means everything's breaking out. The miners are breaking out. It's going to be party in the commodity la la land.
We're gonna see some big moves. That's what I think. And what this chart is telling us is that we are coming into an inflationary environment.
Yes.
This platinum outperforming gold means that it's inflationary.
Yeah.
That's what that ratio means.
Yeah.
So this is uranium's another chart that it's like, oh my goodness, like a uranium to gold ratio or a uranium to anything ratio. It's just absolutely I think it's UX1.
Yeah. Yeah, let's do UX measured in gold. Because in inflation times, you have to start measuring everything in gold. If you want to see like your relative performance, you got to be outperforming gold, right? And they will. All these things will outperform gold.
Well, gold's a moving target upward in an inflationary environment, and these are going to be compressing against the ratio. So these are going to go ballistic. Absolutely ballistic.
Jesus hell! Look at that. The double bottom broke out. It's retesting this, and this is probably going to be gold time once it touches that, if ever touches it again.
Yep.
EFR, did you see the pop today there? Their EFR, a few uranium stocks, 10-12% today there.
My portfolio noticed.
Look at that. So this is and you have my classic reverse symmetry move. So after that, once the ratio goes above here, it's going to freaking vacuum all the way up here.
Yep.
Yeah, it looks great. I always ask my question, am I buying cheap versus expensive? And I think that's the number one question people should always ask themselves before pulling the trigger. And racial charts, I'll definitely tell you, just looking at it, right away if you're buying expensive or cheap, right?
You're also below the cost curves on uranium for the higher cost producers.
What, so, is that fundamentals?
Yeah.
You don't look at that, Andy. You do?
I have to. I do everything. I do fundamentals and I do the technicals. I do both.
Well, I'll throw you a curveball then. I'll throw you a tricky curveball. What are you going to do if the fundamentals suck, but the price action is awesome?
That's called Bitcoin. I don't buy it.
Oh man, that's so funny and true.
I didn't buy it.
Because of that.
But this, I'm buying the living poop out of this.
Okay.
We have an energy crisis. Oil and natural gas are in beast mode. Actually, natural gas, if you look at it, it broke out of a megaphone pattern to the upside. And,
the futures.
That would be NG1, whatever.
Henry Hub.
Yeah, and if you zoom way in, you can kind of look at an expanding wedge starting at the bottom of. You got that thing. It's probably 20. I've got the little tray here. Let me move this thing. I can move it.
What? Jesus, look at that thing.
Yeah, but it's breaking out of that wedge type pattern in the very short term, how it blows out, and it's also breaking up across like that. It's broken like everything. So
it's going here.
Yeah, but here's the thing: what does natural gas cost over in Europe? And we're shipping all this stuff over there to compete with it. So I think that's not the top. That's the beginning.
Well, there's one thing I noticed, Andy, and it happened with, I'll show you the wheat chart. ZW, wheat. There you go. And there's one thing I noticed is it's the commodities, they do plateaus. It's like every time there's an inflation cycle, they never give it back. So, okay, I don't have the data before 70 too much. Or oil, I think we've done it together. So here
Mhm.
it's an explosion, inflationary cycle. But then after that, it doesn't go back to where it was prior to the inflation cycle. It goes sideways for a long time. And then it exploded. That was another inflation cycle in 2000. But look, it didn't go back to pre 2000. It just like it's consolidating. And then what I think is we're going to be creating a new plateau. And eventually, I have to put on the log chart. And eventually, look at these plateaus. They're pretty, we see it better here, the plateaus. And I think we're going to be creating a new one here. And that will be the new norm. But what I see, it's higher lows, higher lows, higher lows, fiat getting depreciated. It's like, yeah, these might not be the
Yeah.
highs actually at all. People are expecting this to crumble back down, but if we stay above these breakout lines here, it's never coming back down all the way back down here.
Yeah, there's huge problems in food production because energy, we have an energy crisis. And I'll just say that there's an imbalance in energy right now. And I'm not sure that renewables can make up the difference. Like, I don't know if they're a viable alternative. So if they aren't, and we're not investing in natural gas and oil, and those were to, let's say they're not viable alternatives, they actually make the problem worse, these things will go ballistic because your input costs of natural gas for um, all of these commodities are going to be astronomical. And then you're going to have less fertilizer. There's going to be all these tertiary effects. The input cost, which means your cost curves will continue to drive higher. I just we're whenever we hit some sort of problem in energy, it just amplifies everything. And I think
Yeah.
we're hitting a worldwide problem in energy. So it's
Look
all
at
going to get
that bullish
amplified.
pattern. Are you bullish, Sugar?
Yes, sugar
It's
looks ridiculous.
I think people are going to regret it now. They're going to see, oh, I had 12 months. I didn't trust it. I didn't trust this pull flag. I had 12 months to prepare, and then they're just going to see it rocket and say, okay, I missed it.
Yeah,
Because
sugar looks really good. Yep.
yeah,
There are so many commodities that look so good right now. And obviously, this is basically just more evidence for an inflationary period.
yeah, I did. I just want to show you this. Okay, there you go. Yeah. It's sometimes I always doubt myself, and I find charts where I say, okay, maybe not, Pat. But look at this. This is the gross domestic income. So people's salaries. It's pretty much everything like salaries coming into the States, right? Everybody's salary. But then when you adjust it for the PPI, like proxy for inflation,
Mhm.
it's getting the people's purchasing power or income is getting demolished by inflation. And every time we've had that, it's every time that 7-year rate of change, it's a black line, has broken down, and it broke down violently here. It's we've been in a 10-year bull run in commodities every single time.
Okay.
So
Yeah. So you're looking at a potential leading indicator here, where it breaks the momentum to the downside, and it
yeah,
yeah creates a gigantic bull market.
it's
Agreed.
yeah, it's like I don't know how deep it's going to go because now it's starting from a lower highs, and now it's like already in negative. And usually we didn't stay a long time in negative, so that means people's purchasing power kind of came back over a 7-year period because of alleviating inflation and or wage increases, right? But I don't know, man, or how long we're going to stay in negative. So that means as of today, your 7 years ago, your wage inflation adjusted is now in the negative. So you even if you had pay raises for the past 7 years, inflation has destroyed all of that. There's like all your
Yes.
pay raises are down the drain. Everything you had, it wasn't enough.
Yes. So the if we're coming into what this chart could be telling us is that we have a problem that's coming ahead of us. And the problem could be much larger than what most people think. Maybe that goes to minus 100. I mean, I don't know. But what if something ridiculous happens where we have an energy crisis and we think we're going to solve it with renewables, and let's say it doesn't work? I don't know.
It's crazy. It's crazy. And
But
check
the chart would
Andy.
show it.
And here, especially here, there was a breakout. Like here, there was an expansion in, I guess you could call it purchasing power. So your income adjusted for inflation wasn't that subdued. But right now, look how close we are to the previous time we had an expansion. So you're right. What if this line that has been going up forever will, it's over? Imagine, because I always ask my question, like US equities have been angling upwards since forever, but imagine if they start going down forever.
That's a possibility. You know what that's called? It's called that your resources aren't as plentiful to grow exponentially into. So if you were to have a resource constraint, whether it be energy or some materials in the market, you would actually see that happen. And all the money would be diverted to commodities to produce more. But if you can't produce more, I don't know how you get out of it. You'll have to be creating different things, and we'll see what happens.
Yeah, yeah.
Copper
They're
looks
all
great.
fighting for okay. I wanted to make like just like another chart I've been the money has been, hold on, I'll okay, it's a chart I put on my website, but I'll show it here. This is the SPX to gold ratio. You love ratios, man, and I realize there's so much more information when you use ratios, so much more, Andy. It's like the most underused tool, or maybe it's just me waking up to ratios, but they're so
That's
useful.
all I use, or almost all I use, is a bunch of ratios. Yep.
Yeah, because they help you situate where you are, right, and in relative to something else other than a depreciating fiat, because the fiat's depreciating and everything's going up. Okay, but it's like you're in an echo chamber. You're not really seeing where the arbitrage play is, right? Where you have a skewed advantage, a misprice. Okay, the SPX measuring gold. So this is the .com bubble where all SPX was killing gold. Here's the M2 measuring gold. So the money supply. What was gold's share of the money supply? And you see then when gold is getting its butt kicked by money supply, that means the money is going actually in SPX. So money supply is still going up, but the lion's share is going into SPX. And here's SPX measured also in it's money supplied measure. No, SPX measured in money supply. So when money supply is kicking SPX butt, then that means SPX is not getting its lion's share that it used to. But you see all these three ratios, they're guiding the entire macro landscape of where the money is. So I see now M2 as the money everybody's fighting for. It's either going in US equities or it's going into commodities. It's one or the other. So depending on where you think this is going to go, or
It's going to go down.
yeah, well, I think so, right? I think this is a blow off top that we'll never see again. It's like I just want to show this one here. So this is just the SPX measured in the money supply. I think this is the .com bubble was the mother of all bubbles. Like, so even if nominally the price is higher in the like the Nasdaq today than it was back then, the percentage of the lion's share of the money supply that SPX was holding during the .com bubble was astronomical there. Just crazy.
Yes. Everybody went into it.
Yeah, this was like the thing, right? I don't know. Like, I remember people wanting to retire. I was a young IT tech, and the older guys in the office, I'm retiring. And they probably had to keep working for another 10, 15 years. I'm sorry, guys, but yeah, it's like Bitcoin a little bit, right? All the Bitcoin millionaires, they're giving it all back, or at least the altcoin guys, like they're so.
Yeah, so that's what I think has happened is we were at a very large bubble, and all that money is going to have to rotate back to the actual things that people need, and it's going to have to in order to solve the imbalances in the market in commodities and real estate and all these other areas where all the money has to rotate for a period of time to fix it. That's my take on it, at least.
Well, yeah, because it's weird. Sometimes I hear like people interviews, and I like hearing the narratives. Like, if inflation is high and they just have money for food and electricity and gas, then they're not investors, right? They can't speculate anymore, right? So they're only going to be buying real things, and companies that sell these real things, they'll be going up in value.
Mhm.
It just makes sense. I don't know. I don't know if like I don't want to get trapped in the narrative, but that seems
Well,
to me so logical.
the narrative that I give it is the money flows to where the biggest problems need to be solved. And if you don't have any problems that need to be solved, people speculate in really stupid stuff. So they'll go and speculate in NFTs and Bitcoin. But if you see that a problem's coming, uh, energy related or something that's driven in the real world that is fundamental to the to the existence of humans. I mean, they're going to put all their money in that. They're going to say, I'm going to sell my Bitcoin and move into this thing that I have to do. I have to buy a house. I have to eat. I have to get from A to B. I got to power my, my computer or
Yeah.
whatever they're doing to create NFTs.
I did. Did you listen to? I think it's Steve Angelo or D'Angelo. I'm sorry. It was on
Yeah.
Palisades. I listened to him talk for 3 hours on this chat they were doing with Tom. Man, it was dark. It was almost Mad Max's future. You can't create computer chips anymore. It's like Jesus, hell! I got scared.
Yeah, I'm not that dark, but I would say I'm partially dark, but not that much. And I think we could conserve. I think we can reduce our energy intensity quite dramatically if we wanted to reduce that.
So all this stuff there, let's say like I don't want to bash Bitcoin, but all that electricity mining stuff, it just seems like a waste to me. It's like if you're not powering
Sure.
hot water or light, it's extra. It's extra, man, right? Right?
Well, they use copious amounts of energy for absolutely no utility. So I'm like, why? And they're like, well, it's something that preserves wealth. It has value. I'm like, that's all made up by humans. And I agree that all value is created by humans, but I don't see any value that Bitcoin, if you were to take the price away, just take the price away from it. Okay, take that price away. You could never make more money in Bitcoin. Who would buy it and use it for a transaction? Like
Yeah.
no one would. So why use it? They're all there just speculating.
It's pure speculation, pure. It's like you can't sugarcoat it. The price that because the thing is, I think people got wrapped up, and sometimes silver is not more valuable because it's priced $100. It's not less valuable because it's priced $2. Silver, silver. So Bitcoin, people thought because the market was appreciating its price on the stock market, they thought, oh, it's more important. No, guys, it's as important as it was prior to the price tag. It means more people are either speculating or they want to use it. But what it does intrinsically, yeah, that's it. It has like the intrinsic value of it. The price doesn't change that. I don't think it changes that at all.
Yeah. So the thing with commodities, the way that I view it, and it's very similar to you, the value is there. So what you have to figure out is what is the value to humans, and if you were to drastically reduce the amount of silver in this world, how much would someone pay for silver? What is your computer really worth? What is your ability to drive a car worth? What is an electric vehicle worth? Because that all uses a lot of silver. So the question then becomes, if you're an investor, you're looking. I'll just say this: if commodities or anything is priced based off of the market conditions, does that make sense? So under different conditions, the prices of these things will change. In a shortage of water, water becomes ultra valuable. Make sense? Like that type of environment change. We're buying these commodities at ultra low
Yeah.
prices because the cost curves are so low because of energy. Energy's been plentiful. Energy has been everywhere, and it's been basically you plug a hole in the ground and it starts shooting out oil. It's like, hey, we got a bunch of energy here. Now, if you look, we are going and pushing the boundaries to get oil in no man's land. We're mining oil from sand. It's ridiculous.
Hey, that's what
So,
we do in Canada.
yep,
That's our thing.
it is. It is.
But
Canadian real
I just
estate.
want to sorry to cut you off, man, but I remember back in the days those tar sands, the oil had to be worth $85 for it to be worth. I don't know what the value is today. So yeah, but it's super expensive to get that stuff out of the sand there.
Yeah, but it also returns not much energy
Uh,
to society. So if we're over there mining all this stuff and we're going to do the renewable thing where it just blows up our mineral intensity per unit of energy, we can buy these assets physically under a cheap energy environment and then hold on to it and wait for the cost curves to blow up and all that on a super expensive energy market condition environment. So I'm playing that at least that's where I've got my head at, is the changing market conditions and the valuations that these things have. And I just use the technical analysis to validate that it's working. But I don't know if renewables, my spot is I don't know if renewables are going to work, because they may work on a small scale for part of it. We've already high graded everything in the world, like putting these at the best places possible. We're going to start going into worse and worse locations where the efficiencies drop to nothing, and you're just going to be dumping minerals at this like it's no other. So you get less return, a bunch of minerals, and then you're subject to the weather, which is a non-technical problem. It's a weather problem. So I don't know if it's going to work. And if it doesn't work, the price of oil and natural gas are going to be astronomically high. If that doesn't work.
It's crazy.
I mean, astronomically high.
But it's so weird, because the price of oil, okay, let's say there's no energy cliff. Oil, it's as easy to obtain, but they're printing so much money. Is oil gonna get more expensive, stay the same, or less expensive?
Well, it would get more expensive on just the inflation aspect. But what I think could go wrong is if the money stays the same and your energy declines, you'll still have a hyperinflation because your GDP can't grow, but your debt has to grow on the opposite side. So how do you handle? Usually you create like some debt, like let's say it's a 3 or 4% increase in the money supply. It's probably more like 15%, but you create this. There's usually a responding GDP area. They're like, okay, I create this, but then the GDP grows, and then it absorbs some of that cash that was created with efficiency gains and more productivity and more units out in there. What if you can't produce more units and you have this increase of money supply? That's inflationary because you have more money in relationship to the goods and services that are out there. So I think there's a huge problem if you hit like an energy wall or something happens with energy. You're basically seeing that happen. We're in the
wall. Is that the cliff? Because is that what, like when people say wall or energy cliff, is that what they mean there? We can't. There's like no more new oil. It's peak oil, right? Or there's no, or is that?
So it's the peak of cheap oil, and so think of the future as far more expensive oil, far more expensive energy, and the returns to society will be less. So not only is it more expensive and your volumes start to come down, the energy able to do mining and produce food and to do artwork and whatever else is in society, in advanced society, becomes less and less and less over time.
You're describing the Bitcoin algorithm. It's built to be tougher and tougher. So it's like it's the same thing happening, but with oil production.
Yeah, but oil production is the reason we have advanced economies, and it's the reason that we can support a population as large as we have.
It's crazy. You can't replace oil, Andy. I tried to. I listen to a whole bunch of experts all the time, and because oil, it's not just you build stuff with oil. It's plastic. It does a whole bunch of stuff. You can't do that with solar panels. Build a computer keyboard. How are you going to do the keyboard?
Well, what's weird is I think we're going to produce absolutely everything. I think we're gonna hit oil. We're gonna hit natural gas. We're gonna explode the nuclear power facility. And remember, we've got India and China coming who are raising their living standards in the middle of, they call it their S curves for adoption of energy. And they're going to buy absolutely everything. They're going to do absolutely everything because you have to. The fastest way to reduce pollution is to go as fast as you can through coal, oil, and natural gas and go straight to nuclear. Like that's like the end all be all if you want it to be a emissions free or whatever. Renewables is like running backwards. That's like driving a car and then saying, well, maybe we'll go forward and we'll start riding bikes for 50 miles a day. You're like, I don't think so. That's going to take way longer. I'll be biking all day than actually getting there.
The nuclear is going to do the electricity for the electrical cars. and the natural gas for the heating, or no, the nuclear is going to do the heating also. It's good. What the
Good.
nuclear? What cannot it not do? It does electricity, but it doesn't. Like
Nuclear nuclear is a beast. It can do a lot of stuff. You can create hydrogen from it. You can mix hydrogen with natural gas and stuff, and heat your house with it. And that's with the wasted byproduct of all the heat it has. It can also, do electricity and do base load power, and it's also one of the least mineral intensive energy sources. So if we have a problem with the minerals or pulling this stuff out of the ground, we can build that the easiest.
man, I can't wait to have my Simpsons, my power plant in my backyard there. I saw those in France on the highways. I said, "Hey, it's like the Simpsons." It's like you see those because in France they went nuclear a long time ago there, but they always scared us in North America because of Chernobyl. That But
Yep.
anyways, I'm not too scared about that stuff. But oh man, Andy, it's crazy time. So are we positioned correctly in commodities? Are we? Of course, we could like fight in between each other. Is it gold, oil, platinum? But I think all of these, from what I've saw, those ratio charts, they're all they're going to explode at different times, but they're pretty much all rock bottom. I think they've been beating up for like 10, 12 years. So
I like all of them.
yeah.
And I think you could throw darts at the wall and probably make money in commodities, no matter what it is. The question is, which ones do you think have the greatest leverage if you wanted to play that game? I think uranium does. That one and natural gas are the two that I really like. And then platinum's the precious metal of my favorite. And that's based off the ratios. It's based off the chart. It's based off of inflationary time frames where platinum's generally outperformed under inflationary periods. Someone told me this, and I don't know if it's true. So please, this is just hearsay, okay? Someone had said that in the Weimar Germany, that platinum outperformed all of the other metals, and that the ratio went against gold went to a 4-to-1 ratio.
Wow. In favor of platinum.
Yes. Platinum could buy 4 ounces of gold.
In 2011 or something, wasn't it above gold, right? It was, right?
Yes.
It was like over 2000. And so I'd probably have to pop up those charts, right?
0809, it was above it. Yes.
Yeah. Yeah, it's true because its second high wasn't as high. It really got hit hard in the GFC. It didn't, it didn't come back as strong there. The only one that really came back strong with a vengeance was silver and gold there. They really kicked ass. Sorry, guys. But because oil peaked in 2008. It never, it barely, at 2011, did it get back to its highs?
Not the highs, but it went up over $100. But the platinum, if it gets back to a ratio of like 2.5, we're at like 0.5 right now to gold. So if gold goes to 10,000, I mean, start doing the math on platinum. That's 2.5 times that. I mean, you're like, wow, that's huge.
And name me some platinum miners. They're super hard. Like I always have people.
Platinum miners, there's nothing I really like that I'm ecstatic about. And a lot of like IMPUY is one if you want to look at it. That's Impala Platinum, but that is it's already had a pretty good run. But those are platinum group metal companies. They pull them all out of the ground. So rhodium and palladium already kind of took off. Platinum's the one that I think will do really, really well. And remember, these came from outer space. These metals. Yeah, that's why they're all. Yeah. Yep. And then they were cycled through the crust, and only a few places in the world have them. Wow. That's why it's 80% concentrated to South Africa.
Interesting.
Yeah, there's some in Russia.
Which metals? Just the rare earths, the rare metals? No.
No, well, I don't know about rare earths. This is the platinum group metals.
Okay.
That's rhodium, palladium, and platinum, and whatever else is in there. There's probably more.
Extraterrestrial. It is.
Yes.
Right?
ET. Yeah, you got to get some ET metals. That's how you make money.
I'm so happy to talk to you, Andy. Like I know it's like my selfish pleasure when I get to talk to you because it's like I'm in my happy zone, echo bubble. Sometimes when the metals aren't exploding every single day, I get the trolls and stuff like that there. But the charts are telling you guys like it's still low risk, high reward. It still is until we have a 10-year bull run where we stay above. Those ratios completely flip, and we're U.S. equities are rock bottom versus commodities. I think there's only one play going forward, and it's commodities. The only one, the only game in town, I think there, right? I don't see what else you could play.
Yeah, so I think what might happen is energy will take off, which it has been. That's going to put large pressure on consumer price index, large pressure on bonds to sell off, and because of the real negative rate, and all that money is gonna go. Where do I put this? So you might see dollar strength because they're gonna sell out
Yeah.
dollars, and then it's gonna rotate into probably precious metals. That's my guess. Now platinum. Remember, platinum's unique because there's hardly any inventory and no one really owns it. So when someone says what can absorb the price move higher, they're going to say nothing. Nothing can stop this move. Now in silver, you've got people who buy it all over the place. They own a lot of silver, and someone like, I'll just sell it when it hits $50. Oh, I'll sell it when it hits 100. Oh, I'll sell it. All these people are going to be selling platinum. Everyone's like, do you own any platinum? No. Do you own any platinum? No. No one owns any platinum. It's like, perfect. It's like, oh, that's an industrial metal. Who would want that? I'm like, well, wait until it goes short, and there's no way to solve it. That's why palladium goes up so much. You see what rhodium did? Rhodium went from $650 in 2016 all the way to $30,000 in 2020, I think. 2021, 2020, it was 29,500.
Those are Bitcoin returns, Bitcoin type returns.
Yeah, and what's your risk? Your risk is you're holding a lump of metal and there's no management, there's nothing. And you could swap this for the other platinum group metals, which is a like for like swap, and you don't have to pay taxes.
You know what? I'm thinking, I'm wondering if there's other of these metals that are occult, and I just didn't find a chart for them yet, like that some other rhodium out there that is just waiting. You know, like tin went crazy. Tin and silver, they're used always together. Always together. Those charts, they're practically the same, except silver. It's like it's not it's gonna do eventually what tin did, right? Because they're used together. I think you might have told me that if you use silver, you use tin in electricity, right? They're always together.
Yeah, tin's used for soldering and stuff for electrical components.
Yeah,
and stuff.
It's like they're both.
Silver's all the traces and stuff too. Silver's in that. So yeah, they're very well matched together.
Ah, man, I have to find the next rhodium. We have to search.
So there's things that you can, like, you scroll on your phone. That I think it's indium. That might be one too. Indium's a metal. I think it's indium. There's a couple of metals. There's another one. I can't think of it. I can't think of it off the top of my head. I have to look again. There's another metal that was looking really, really good. That looked like it was ready to take off.
I don't know, man. There's gonna be my biggest what I hope people don't do is sabotage their own trades, because what's gonna happen is a lot of short-term traders. Okay, guys, do whatever you want, but you're at the beginning of a move. You're in the transition period of capital flows leaving, U.S. equities towards, and people are always going to sabotage their trades, man. And they won't be able. They look in hindsight. Oh man, that thing went up 100 baggers. Like I sold after one bagger or two baggers, or it pulled back, and because I didn't want to tell my wife I want to get out. I broke even, but in the true bull market, when those capital flows are going into precious metals, every single dip has to be bought. It's like you're pulling. You have to.
The problem with new investors, and I had the same problem myself, is their time frames aren't long enough. Yeah. Their time frames are too short. They think that swiping left and swiping right on a phone is the time frame that this market's just going to go up and down. It's like no. That the time frames are completely off. Look at this like I want to protect my wealth. How do I protect my wealth? Well, I'm going to buy the cheapest assets in the world. What are the cheapest assets in the world? You use your ratios. You say, okay, this is cheap. This is cheap. And then you create a collection of the cheapest assets in the world in your portfolio. Now, it doesn't have to all go up at once. What if you have oil rocket to the moon and then uranium starts to follow and natural gas then starts to follow? That's the energy sector. But then there's other ones in the portfolio that are lagging. And then your question should be, well, what's a better buy? What's going to protect my wealth more? Something that hasn't moved yet or something that's sucked up half of its value? Well, you want to buy what's got the full value, like a platinum that's just sitting there that hasn't taken that run yet. So my viewpoint isn't necessarily I have to win on everything all the time. The viewpoint is, I want a collection of the cheapest assets with the largest asymmetric bets that I can find in the entire world. And if they're so large in their symmetry that I could have one sector blow up and still get a 4x on the total portfolio. But I still have all these other undervalued assets, which will, I think, eventually go up in value. So it's not about winning on everything all the time. It's about constructing a portfolio that is going to do well under these market conditions that will still push you forward at some point. So, I mean, that's the way that I view it. I mean, I don't have to win on all my money that's deployed at this second.
Exactly.
I know I've got some seeds that I just planted that are growing, and I've got ones that are in mid-stage growth. So,
and that's good psychologically, because one time I put all commodity charts on one scale, and they don't all peak at the same time. So if you have a basket of them, you'll uranium's going up, you get that feel good feeling, and then it's silver turn to spike fine, while the other ones they stagnate, and that's good also for the emotional capital, because you don't feel like you're the best. The girl next door is hotter than your wife. You don't have that. You're happy. You have all the girlfriend and the wife at home with you all the time.
Geez, listen to that.
Wait, honey, don't watch this podcast. But
It
does help when you have and yeah, I don't think that crypto thing helped, like these gains going up too fast, because I talked to new guys and I love trading, but man, it's not normal what happened there. Like these they're all elevator rides, these things, they went up and down and that's it. Hopefully
I think they'll do very well. The commodities, we're just not at that point where the overall retail sector's here yet. We're way early.
Way early.
And this is, if you want to make massive gains, the way that you have to think about it is you have to be ultra patient, because when you buy early, it slowly comes up. Your first 100% might take a year or more.
Yeah.
Or maybe it's 3 years. And then all of a sudden, I like what somebody had said, you make decades worth of gains in years. It just all happens when it starts to turn on higher and starts moving. That's where you have to be patient and just hold on and stick to the ratios for value.
Yeah, I totally agree. That's when you got in early, not in fear of missing out. Like, yeah, but that's it. Don't sabotage the trade, guys. Don't sabotage it. It's a turn. It's slowly until that gold to SPX ratio breaks out to the upside. Like you said, these things are going to go up 50%, down 25, down 100. But after that, it's going to be 10% day after day after day, and it's just what the hell is happening? Well, that's the base that you created. The capitals aren't even coming in yet. It's just as simple as that, Andy. We're so early, because when I saw gold break out in June of 2019, I was all giddy up. I said, this is it. But that was just the first step of all of what's happening today. It was just the first step in 2019. And yeah.
There's positives and negatives. So the way that I look at this is the positive, everybody wants stuff where they buy it and it goes up directly right after. But I view it differently. So when I look at something and I know that the ratio is low, the ratios are really what guides me. I pile in, and I continue to pile in if it's of good value. So platinum, I've been buying this for like 3 or 4 years. I'm just like, boom, boom. I just keep pummeling it. And when I look at this, it's like at some point it will go in favor and become expensive. It has to. It can't be this cheap in relationship to palladium and other metals that are substitutes for it. At some point, they will substitute. And when I look at it, if you can put the full faith and maybe whatever, if you trust the ratios, if you logically trust the ratios, and you do what's logical and completely omit emotions, which I know is very difficult to do, all you would do is pile into the cheapest assets continually, and you hedge yourself with time. Then the question is, 1 or 2 or 3 of let's say you've got 10 different assets. You've got 10 assets out there. These are the cheapest assets in the world. You pile all your money into all 10 assets, which you think are the best assets. Some of these are mining companies or whatever they are. They're highly volatile. and let's say a couple of these are the symmetry is so big that you get a couple of hundred baggers. If you put a 10% allocation to each of these 10 sectors, and one of the sectors goes up ridiculous, like 50 times, right? Your portfolio will perform dramatically well under that scenario, which means that the odds of that happening are pretty high if you're buying the 10 cheapest or 5 cheapest assets that the world has to offer. One of them's going to hit. And if it hits so big, where 10% of your portfolio goes up 10, 20, 30x, I mean, you made a bunch. But guess what? Everything else is just, that's all icing on the cake as that goes up too.
Yeah, that's a good game plan.
I know that's all I've done. That is literally what I've done with my portfolio. I've identified what I think are the best opportunities for the next 10 to 15 years, and I continue to pile into it. And I just wait.
Yeah, you just wait. But let's say you're wrong. Sometimes I look at those ratio charts, gold to silver, SPX, and so it hasn't broken out yet. So sometimes I say, are we in 1996? I know we're not, but well, sometimes I say, because in 1996, gold was about to retake, and then it just it vomited for like 4 or 5 years, and then U.S. equities went in meltup mode. Is that do you see those scenarios where we're something happens and then we're trapped for another 4 years before it really blows up?
It's possible. Anything's possible. But if the question then would be, in today's market, if you can identify where all the value is, and that's you have to use ratios and compare it to history. That's the only way that I know how to value a sector. Let's say you held on to you bought something that you had to hold on to for 4 more years, and it was one of those sectors in your portfolio. If you're going to retire at 55, does it really matter? And if the upside potential, if you had bought in, what was gold at in 96? I don't even know what it was off the top of my head. I mean, let's say you bought a whole bunch in 96 and you're like, oh, it didn't go anywhere. And then you bought in 97, you bought in 98, you bought in 99 as the ratios tell you. And then where would you be today?
You'd have a big position size, and because of the gains you got later on, you're good to go. All those gains you didn't get in those 4 years, you're going to get them on the way up, right?
So I'm just saying, maybe you have to expand your time frame. Maybe the time frame is too shallow. But I can tell you this for a fact: gold is cheap to the money supply. That is a fact. Gold is cheap to the stocks. Fact. Gold's cheap to bonds. Fact. Gold is all, well, I would say the only thing that gold is expensive to is really real estate. But that's about it. And when I look at that, I'm just like, well, I just have to sit in it. You don't have to make your money this second. At least I don't. And I know that the charts are telling that, but the charts show the fundamental picture of on the long term. They don't show it in the short term.
No, they don't.
Short term, it could be, maniacs and people getting afraid and emotions. And I don't know. If I just position out, and I've turned a little money into a lot of money here. Like it's starting to get quite dramatic.
Well, with the prices you showed me there that you got in there, it's like even a small amount would have done some nice returns there. So that's, oh man, I wish that for everybody there, and hold on to those gains. Have a game map that's going to get you in, and also make you exit, right? Because eventually this is going to end. I don't know when, or the momentum is going to slow down. It's going to be time to start looking at some other whatever sectors, industries. But yeah,
I'm going to ride it until the ratio gets lower and the market conditions, the liquidity dries up. So those are the two things that I'll be looking at, and the inventories start to normalize. And I think that the inventories will be normal for a while. We could break that downtrend, and I'll probably still ride it. And that could be what we could be doing is the first wave of a large first wave of an Elliott wave. And then the third wave is even bigger than this. And I'm looking at it from a big picture view. The only reason I'm thinking that is everyone is betting that the renewables will work. Everyone's betting on that. Now, here's the problem. Let's say let's say they do work. Let's say we can generate a bunch of electricity, but we can't build the electric vehicle cars. What good is it going to do? What good is that going to do? You ate up all your minerals. and then we can't implement the electric vehicles as fast as we want to. What if we can't store electricity? That hasn't been solved. What if the grid can't handle that many cars on it to charge? What if people buy electric vehicles, they go on a long trip and find out that they're waiting 3 hours to charge their Tesla? They'll be like, screw this, give me a vehicle, I'll just fill it up, I don't care, my time's worth more than sitting here waiting. And that's happened to people. So I don't know, I just think that there's going to be barriers to the adoption of EVs over a period of time. And I think the energy crisis will last longer because we haven't been investing in oil and natural gas to make the necessary adjustments. Like, we don't have a proven solution in place. They have no idea. And they're like, we're not going to invest in it. We'll just go the electric vehicle route. We'll just put in renewables. And I'm like, yeah, but what if that doesn't work? Like, we've already put it, and everywhere else, wherever they put this, it hasn't worked.
They're going to need a lot more. And you're right, because all these capital flows that haven't been going into these miners or these companies, and you see it again with that SPX to gold chart, the money supply to SPX, the money has been going to all the speculation instead of building stuff that's going to render possible, a move to EVs, stuff like the grid, or like fixing everything up, electricity. Because in Quebec here, man, electrical cars, you don't get the kilometers. That's, if they say 300 with I'm sorry, it's minus 30, it might not start, and you're going to do probably half of the kilometers that they say you're going to do here in Quebec. Those cars, and they break. The Tesla, I'm sorry, Elon, the ice gets stuck in the wheels, the bumpers break. I know it has nothing to do with but they hadn't really tested them in the weather here.
Yeah, I know. And there, in Minnesota is the same way, because we're up north, just south of Canada, and it's really cold there. And every time I go back, I'm like, well, no one's taking those cars. They're just sitting in the garage.
The combustion engine is robust. It's tested. It works fine. I don't understand why we have to get rid of the combustion engine. It's great. Just or the hybrid ones, at least. Like, get a Toyota hybrid where you have an electrical thing. But why do you want to scrap the? Why do you want to get rid of the combustion engine? Do we have to? I don't know. Why do they want to kill that?
I don't really know. I don't think we have to. I think we should just become a lot more efficient with what we have, and maybe we drop different engines in these cars that are way more efficient if we can, or drive less. Just don't drive at all. Work from home.
Hey man, we did over an hour, Andy. It's incredible. Should I split that in 2 episodes? Nah, I'm gonna just put one. I think people are gonna enjoy the rants.
Yeah, definitely.
Hopefully, I didn't interrupt you too much. It's I'm trying not to interrupt. You're the guest. I'm the interviewee, and I'm supposed to let you do your thing. But it's hard because I'm interested.
No, you're good. Yeah, I like it.
Yeah, all good stuff, guys. All right, Andy, it's time to tell everybody where to find you.
Yeah, so you can find me on my channel, Finding Value Finance, or you can find me on Twitter at finding_finance if you want to join me on Twitter.
All right, guys. Follow Andy, man. I can't believe it. Until you have over 50,000 followers on Twitter, this is unacceptable, guys. It's crazy. It's just insane. Hopefully, anyways, whatever. When folks understand that, when you get to 50,000 followers, it's probably going to be the end of the bull era, right?
Yeah, well, we'll see. We'll see what happens.
All right, guys. Follow Andy, please. Ciao, guys. Thanks, Andy. I appreciate your time, man.
Yeah, no problem.
And recording.